Hey everyone, excited to be back for this week's edition of Frequently Asked Questions for Commercial Real Estate. In today's video, what I thought I'd do is talk about a concept that is extremely important in commercial real estate, and that is known as a market cycle. Now you may be asking yourself, what exactly is a market cycle? Well, the actual definition is a term referring to the trends or patterns that emerge during different market or business environments. Now, the simplified version that I explain to clients or whoever that I'm dealing with is there's ebbs and flows in the economy. And if you take a snapshot of one of those ebbs and flows, that's what I consider a market cycle. Now, the reason why learning what a market cycle is and the different characteristics of each of the parts of the market cycle is important is because there's going to be unique opportunities for commercial investment in each stage within the cycle. So being able to identify what stage you're at in the cycle is going to be extremely important and could be extremely lucrative for you. So now what we're going to dive into is the 4 different stages of a market cycle, and then we'll highlight each of the characteristics of each stage. Now, the first stage of a market cycle is the recovery period. And this generally happens roughly 6 to 12 months after a recession occurs. This is defined by a period of low interest rates. Banks begin to slowly open up lending to different institutions. Investors start to build a little bit more confidence after they probably got hosed during the recessionary period, and development begins to take place again. Developers come in, purchase land, or repurpose existing buildings for new commercial uses. So that's the period number 1, is the recovery period. And during this time, the opportunities that present themselves could be quite lucrative, in particular if you're able to ride up to the second stage of the market cycle, which is the expansionary period. Now, again, this is a period that's defined by low interest rates as well. Investor confidence is high. Banks are loaning out money, and developers are gung-ho about developing more new projects. Now, if you were to think of this stage as a snapshot over the last 10 years, this is defined as a period between maybe 2013 and 2018. We saw rapid expansion in the economy, and everything seems to be going very well. Now, in the third stage of the market cycle, which is what I believe we're currently in, is a period of hypersupply. Now, what this is defined as is investor confidence is extremely high. Developers have been building properties over the last 5 to 6 years and continue to have a strong desire to do more projects. However, demand is starting to equalize. Therefore, as new projects begin to be completed, the supply of commercial real estate in this instance is going to be much higher than the demand. And what happens in this environment? Landlords are going to be forced to offer concessions to people who are looking to lease space in their commercial property in order to incentivize them to move in. And then potentially rents also will start to drop as there's less and less tenants out there for landlords to fill their space with. This period is defined as 2018 to the present, is what I believe is a period of hypersupply. And then finally, the fourth and final step of a market cycle is considered a recession. This is defined by a period where banks just freeze up as far as their lending is concerned. Banks are inherently risk averse, and as more foreclosures start occurring, as the financials of different investors start to turn, banks are less and less likely to loan out money to investors or developers. This is also a period of time where there has been a period of hypersupply. Therefore, maybe there's a lot of vacancies for investors, and they start to panic and they decide to sell their properties, which means there's a flood of potential properties that go into the market, which drives down asset prices. And again, because they haven't been able to fill their properties for a longer period of time, foreclosures also increase as well. So these are usually the times where the best commercial investment opportunities come to market, because asset prices are deflated, and you're able to uniquely capitalize on investors that had overextended themselves during the period of expansion and hypersupply. And what I believe is we're currently in a period of hypersupply, and over the next year or two, we will go into a recessionary period where these trends will occur. And I think over the next, like I said, 1 to 2 years, we will see a unique opportunity for people who are interested in investing in commercial real estate to be able to jump into the market and capitalize on some great investment opportunities. So I'd really like to hear your feedback on this video. I'd like to hear what you have to say over what you think is going to happen over the next year or two. If you're currently in the market to buy commercial investment property, it may be a very unique opportunity to do so. If so, feel free to reach out to me. My number is 502-536-7315, or you can reach me via email at raphael@grisantegroup.com. All right, well, be sure to like, share, and subscribe to this video, and we'll see you guys next time. Bye.